Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, the 23rd of January, 2007, and let's take a look at the S&P 500 on the screen right here. The spiders closed up 44 cents, or about 0.31% today, and it was actually, I thought, a pretty constructive session. Let's just take a look at where we are. We've been in this range that's been confined with resistance on the upside. Let me just change this. But it's been confined by the resistance on the upside near about 143.5 or so, and the support has been found about 140 and 50 cents, right around in there. Anyways, it looks like the market's been holding up very nicely in here, creating maybe a little bullish flag, getting ready to break out. A lot of the emails I get, people are turning very bearish on this market, but the evidence just isn't there from the market yet. Let's listen to the message of the market rather than opinion. So looking at the 10-minute time frame, what we were looking for yesterday first was a rally back above the resistance we had seen yesterday from last week's lows. That occurred early on. The market held there. It then overtook the 5-day moving average as well, but couldn't get past the next level of resistance, which is at $143.10. There, I said it. But for 143.10, the market came right up to that level and then backed away. So we still don't have conviction from the buyers yet. But I think above this level, like I've been saying, I think getting above 143.10 could take some bears off guard, and we could see the market run out to new highs based on it pushing above that level. So continue to be cautiously optimistic in here on the S&P 500. But again, if the market's to break support down at 142, then things could get ugly in a hurry. So you have to keep that in mind, obviously. The Nasdaq 100, the Qs, these were off 11 cents. And as I've been saying, this group has been a lot weaker than the overall, rather than weaker than the S&P 500. And we can see that, again, from this failed move, often comes fast moves, and it might just end up trapping a big group of people in here long. So looking for, I still think that it's reasonable to expect that we might see a test of that $43 level in here. And the way the semiconductors act, I think it's becoming more reasonable in a short order, actually. Let's take a look at this half-hour chart, because again, we wanted to look at this 2/3 retracement level. A lot of people look at Fibonacci. I tend to think that it's kind of similar to moving averages. A lot of time they tend to be a self-fulfilling prophecy. But it's come down and tested this once again. I think breaking below 43.50, you're going to have to get very defensive on this market. And we've still got this declining 5-day moving average. The market tried to recover a little bit in here, but it just isn't ready yet. It doesn't look like it's ready to make any recovery. So continue again to be very cautious on this market, and closing below, really getting below 43.50 and staying below that level for more than an hour or so, I think is going to be pretty damaging to the market. And the catalyst for such a breakdown might come from these semiconductors. You look at this group, they've been hanging on this level of support down at about 32.75, just above that. And the longer it takes for the market to rally from an established level of support, the less likely it becomes that you will get that breakout. So we have to be very careful in here right now. And I've been looking for hopefully a rally up towards 34, and then we could sell short the weakness from there. But that hasn't occurred yet. So we are still in a range. This range, again, is defined by about 35.70 on the upside and 32.75, 33 is support. But it keeps testing this support more often. It's hanging below these moving averages, which are declining, and it's looking pretty ugly in here. I don't want to. I want to wait for the evidence from the market to tell us that it's really broken down, but it definitely does not look good here. Again, this declining 5-day moving average. The market tried to rally up here a little bit today, couldn't get past the highs of last Friday, and so it's got resistance in here at 33.65. Let's call it 33.70, and breaking below 33 bucks a share, I think could be the catalyst for a bigger move. And I think we have AMD reporting after the bell today, so that may be a catalyst to either save this market or just to crush it. So continue to be very careful in there. The mid caps have been the group that have been holding up the best. This is kind of the midpoint of their trading range, and that's been acting as support, and we got a little bit of a bounce off that level today, but we've seen support at 145 and resistance up near 150. What we were looking for today was a move, first of all, above this little resistance level. I thought that getting above that 148.75 would lead to a test of 150. We're not quite at 150 yet, but if 150 gets taken out, I think this mid cap is off to new highs. And it's just a pretty confusing time overall for the market when we've got the S&P and the mid caps looking as good as they do, but the Nasdaq 100 looking like it's just really ready to croak here. So you've got to just continue to be very careful. That's the main message to take away in here. eBay, we got short yesterday at $29.65, and our stop was to be at where did I have that written down? $29.50. So that $29.50 stop didn't get hit today. I think you can lower your stop down now, let's say to $29.15 in eBay. So let me write that down, $29.15 eBay. And let's see, what did we have? We had Apogee as a long candidate above $19.20, so that stock should have been purchased here. Our original stop was $18.95. Let's raise that up to $19.01 in Apogee. Didn't really do anything, but it's not hurting us here either. Sapient, SAPE, we were looking for a pullback to $6.15 first. We did get that pullback to $6.15. Then we were to buy strength above $6.20. So it should have been purchased at $6.20. And at this time, I think you can raise your stop to $6.26. And that'll give us a profit if we get stopped out. This stock, I checked a little bit of the fundamentals. They reported better than expected earnings. There's a big short position in it. Not that that's why we're trading the stock. We're trading the stock because it has a great looking chart, but hopefully some of those shorts are motivated to cover after that recent positive earnings surprise. Shares of Dynamic Materials, boom, we were looking to sell this stock short. What we were looking for was first the rally to $27 a share and then to sell it short below $26.80. We had the rally, but not the subsequent weakness, so we got saved by not taking a position in here because the stock was strong all day. ESRX, same thing. What we were looking for in here was a rally to 66.50, which did occur, and then we wanted to sell short weakness below 66.30. That didn't occur, so there was no reason to get involved in ESRX today.